It's a 0.4, not as good as pre-market, but still good. 1/3% higher.
Market is down just a little bit, 10 points or so. 10,377 is where we're at.
Market, the trade is flat, though key indices are off the day's low.
Once again, almost a similar pattern that you had Monday, big rally, Tuesday, just a bit of cool-off. Wednesday, a big rally, just a bit of cool-off. Of course, the Bank Nifty ahead of weekly options expiry up 200 points, and the mid-caps have done well.
We've got gains on other stocks like IGL, NBCC, and these are big gains, 6-7% we're talking about on these F&O stocks. Decent session for a couple of the NBFCs also. Cholamandalam would be sort of a case in point. Markets consolidate after yesterday's sharp surge. Both major indices end flat. The Sensex shreds 250 points from the high point of the day.
Financials perk up in trade. Yes Bank rallies 8%. IndusInd Bank rises nearly 3% even after reporting 3,000 crores of exposure to IL&FS. NBFCs also joined the party. Cholamandalam, Shriram Transport, Edelweiss, Repco, all of them surge, including Indiabulls Housing Finance and Bajaj Finance.
A stronger rupee trips IT and Pharma stocks. Nifty IT loses 2%, dragged lower by HCL Tech, Tech Mahindra and Infosys, while Nifty Pharma loses over 1%, led by Lupin and Dr. Reddy's.
HDFC raises early gains after reporting a mixed second quarter. Profit jumps 25%, but rising fund cost is a worry. Marico slides in trade even after meeting expectations in the second quarter.
United Spirits gains more than 7% after reporting a 69% rise in profits. L&T also ends the day in green, following an all-round beat in the second quarter and pulls up the entire capital goods sector. Well, those were the top 5 headlines of the day from the Lal Street. Hello and welcome to Markets Today Talk Back. This is a show where we tell you about the 8 hours of the day's trading action that just panned out in 5 headlines. I'm Surabhi Upadhyay, and with me this evening is Ekta Batra. Hi, Ekta.
Hi, Surabhi. Yes, absolutely. Over the next 30 minutes, we will be discussing those top 5 market stories, and our guests will be answering all of your stock queries. Joining in to answer all of those questions today is Mayuresh Joshi on the fundamentals and technical expert Mitesh Thakkar. Evening, Mitesh as well as Mayuresh. Well, before we get talking about all of the queries that we have, well, Surabhi, turned out to be a good pullback for the mid-caps especially.
Oh, absolutely, Ekta. I think nobody would, at least the bulls wouldn't complain with today's trading action because, yes, we've had a flat close, but then this is a quiet consolidation coming in after 2 very strong days this week already. The 220-point rally on Monday and the big move that we saw on Wednesday. So today was just about sort of taking it a little easy. As we told you in the flyers, the financial space was actually looking quite smart. And as Ekta pointed out, really mid-caps were telling us that traders were alive and kicking and there was accumulation going on. And in fact, just some examples, even stocks where there was negative news, it was actually met by buying, whether it's IndusInd Bank or a stock like Berger Paints, because the negatives seemed to be already in the price. It was time to move on. At least that's what the message the market seemed to be giving today. Private sector banks had sort of strong buying momentum. Tech stocks, as we told you, was under a bit of pressure. That was actually the one pocket of the market where there was very clear profit taking that was going on. On the large cap earnings screen, the one big stock to talk about today was HDFC. And if you pull up the chart, you'll just see how volatile the stock has been, though really technically didn't find something too wrong with the numbers. They explained how, if you have to remove the securitization and then take a look at NII and NIM margins, those numbers seem to be all right. But anyway, that stock chose to end on a bit of a soft note today, Ekta.
Yes, absolutely. A lot of stocks in focus. So I'm just going to take you through a couple of stocks that stood out. So from the financial space, it was Yes Bank that rallied, Axis, IndusInd, Indiabulls Housing Finance, Equitas, Edelweiss, Divan Housing, all of these stocks which are higher, both from the banking space as well as from the NBFC space. Other movers from the Nifty included L&T, HPCL, IOC. All of these on account of either earning reactions or coming ahead of numbers, and something like Maruti Suzuki, which was higher by around 1.4%, reacting to auto sales as well. HCL Tech, TechM, Dr. Reddy's, Lupin, all of these stocks saw profit booking. So IT and Pharma really was weak today. And from the broader markets, what stood out was the rally that we saw in Escorts, up 7% for that stock. Ashok Leyland, which was a bit sluggish. Adani Power, which spiked up. Reliance Communication, which was up 14%. And something like even a Canara Bank, which was down 4% because of the weakness that we saw in the operating profit of the numbers this quarter. But let's find out what our guests are making of the markets. to the charts first. Mitesh, over to you then. What are you recommending on the Nifty now, and what kind of trend would you see for the mid-caps as well?
Yeah, good morning. I think since Monday, we've gone into some kind of a reversal on the short-term charts. The first targets were close at about 10,400, 450 zone, which have been met. I think we might see a few days of consolidation between 10,450 to about 10,300, but the immediate directional bias remains on the upside. So I think there should be more of buying done on stocks, and I think on the indices, if you get any dips closer to about 10,330, 325 zone, I think that will be the ideal entry point. So for the time being, we'll maintain a positive bias, but next week could be slightly more subdued, more quiet. And as we approach maybe the modest session, maybe we should again pick up steam. And once 10,450 is crossed, 10,600, 650 could be tested.
Okay, all right, gentlemen, let's move to the second headline now. Financials had a good run today. Yes Bank and Axis Bank did their bit for the private sector banking space. Yes Bank zoomed actually about 8%. Axis Bank gained over 3% as well. In fact, IndusInd Bank, that's what we were just pointing out, also managed to end higher despite announcing a 3,000 crore rupee exposure to IL&FS. Select NBFC stocks also joined in the rally. Cholamandalam, Shriram Transport, Edelweiss, Repco, all of these stocks were also higher today. Well, on that note, let's straight away get to a question that's coming in on the financial space. Anup Vyas has written in from Mumbai. He has a question on ICICI Bank. He has been holding 260 shares of the bank at a price of 292 for the last 3 months. He's a long-term investor and wants to know whether he should hold on or whether he should actually sell out right now. So, let me ask you this, Mayuresh. Obviously, the buying was quite evident on ICICI Bank even before the numbers came in, and then we had blockbuster numbers. What would the advice be on the stock now?
Evening, Surabhi. I think it's a clear hold from our side. I think the numbers, as you pointed out, were blockbuster, and the indications again are that whatever you've probably seen in terms of pressure points, the asset quality pressures are slowly ebbing off, which basically means that the credit cost pressure should start coming off as well of the balance sheet. And as far as their advances growth is concerned, retail advances are growing at a very fast clip. And even on the non-interest income, retail income actually forms around 70-72%. So the bank is on a solid base. There has been a management change, and the kind of subdued return ratios that we've seen in the past because of all these concerns should improve drastically going forward. So we expect ROEs of 11% and ROEs to improve as well. So a clear hold from my side.
Okay, all right, so that's on the financials. But the third headline for today is IT and pharma sector stocks had a rough day, all thanks to a stronger rupee. The Nifty IT ended 2% in the red, which was dragged by HCL Tech, TechM and Infosys, while the Nifty Pharma lost more than 1% as well. Lupin, in fact, was the main laggard, losing over 4%, followed by Dr. Reddy's, which was down around 3% at this point by the close of trade. We have a couple of queries. We have Bala K from Delhi, who's written to us with a question on Wipro. Been holding 50 shares of the IT company at 300 for the last month. Long-term investor wants to know if he should hold or sell. Well, Mitesh, we'll get both a tech as well as a fundamental call on this. But over to you first, Mitesh. What would you recommend on Wipro?
To me, I think it's a hold, or in fact even a buy. Wipro technically has underperformed the other IT peers for many months now. But also if you look at the chart, it's sitting at a very important long-term level of around 330, 340. And once it crosses that, that will be an all-time high for the stock. And once the breakout above these happen, I think then I would look at targets of around 420, 430 over here in the next 6 to 7 months. So I think I'm quite positive on the chart structure. Is shaping up nicely. Though a laggard, I think now is the time when the stock might play catch up. So clearly a hold or even a buy if you want to do it.
Okay, and Mayuresh?
So again, I think it depends on the perspective. Again, as Mitesh was pointing out, it is largely underperformed because both in dollar and constant currency terms, it has clearly struggled compared to its peers. Healthcare still appears to be a little bit of a patchy issue with Wipro. So my sense is that the other IT players might probably do well within the top tier names. Tech Mahindra, again, I think at least on the EBIT front, has done a very stellar show. What it probably do in terms of the 5G order book, the communication segment, expected to do well in a rebound in the enterprise segment over the next few quarters, should probably hold up its earnings profile going ahead. Similarly is the case with Infosys in my opinion. So again, the kind of digital wins that it has done this time around, the order wins, the expectations of utilization improving and attrition coming down, I think those can be value adds. So in my opinion, I think Infosys, Tech Mahindra are better bets within the top tier names.
Okay, so that's a view on some IT stocks. Let's move on to the next query. Pramod Deshpande from Hyderabad has written in with a question on Aurobindo Pharma. He has been holding 100 shares of Aurobindo at a price of 605 rupees. He's making a nice tidy profit for the time being. He wants to know whether to book this or whether to hold on. It's been a very interesting journey for the pharma side of the market, Mitesh, as we know. And, here's one person who's still in the money in a market that's had a challenging last few weeks. What would you advise on Aurobindo?
So it's neither a sell, neither a hold, it's a buy. I think Pharma, after a number of quarters of consolidation, is now showing signs of turning on the upside. We have seen some of the pharma stocks really go into outperformance mode, and Aurobindo, Torrent Pharma possibly lead the chart, followed by Sun Pharma and the other pharma names. So I think for me, Aurobindo, I think once it managed to get past the all-time highs of 870, 880, and I think we are certainly heading towards those levels in the next 8 to 10 to 12 weeks. I think once it crosses that, then I think I'm looking at 1200 plus kind of a target. So extremely bullish on Aurobindo Pharma, no reason to sell.
Mayuresh, what would your view be on Aurobindo still to come out with its numbers this quarter?
So numbers can be a little bit soft, Ekta, but I think the view on the stock remains positive. Again, our view is that the kind of strides that it has done, specifically after the acquisitions of Actavis and Natrol, the formulation business accounts for a chunk of its top line. What it probably expects to do, both in terms of the injectable launches, they're expecting 10 to 15 launches in the second half, and that is a high margin product. And again, the ARV side of their business. So I think both these segments should probably hold up the kind of pricing pressures that we witness for the sector as a whole, because they are high margin components contributing to overall earnings for Aurobindo. So we are expecting a very steady earnings growth for Aurobindo. Yes, capex and R&D might remain a little bit elevated, but that's in the right direction because of the ANDA filings that it does. So remain positive on Aurobindo Pharma, clear hold from my side as well.
Okay, all right, gentlemen, stay on with us. We have to take a very quick break. As we do that, here's some market opinion coming in from a market veteran. We have views from Mr. Ramdev Agrawal, Motilal Oswal's co-founder. Listen in what he has to say of the current market setup.
We have a quite massive correction, so hopefully we are done with current round of correction. But the way things are unfolding, particularly in the credit market, and credit market is backbone of economy in the sense that from the consumer side, that has been the one strong segment. And now we have seen in L&T result, at least the infra and capital goods side is picking up. Now both should go together to really take the economy off after a long time. There are some wonderful companies whose stars are going to shine, and suddenly you are going to see a lot of flow of orders and margin expansion and sales growth, and then margin growth, and then P growth. All three, when they all come together, you get a mini to mega kind of thing. The company might be say 1,000, 2,000 crore company. Right now nobody bothers, and then suddenly it takes off to become a lakh crore company. All these still assets are being cleaned up. They will all give huge orders to complete the backlog in terms of their even maintenance, and then increase the capacity. So you will see a bunch of orders coming from there. Still markets are very good. So wherever businesses are doing well and they can dump capacity not only in India but all over the world.
Welcome back. You're still tuned into Markets Today Talk Back. Well, let's get to the fourth headline of today. From the earnings corner, we had HDFC, which erased early gains after reporting a mixed second quarter. Profit jumped 25% on a yearly basis, but the rising fund cost was a worry. Abhishek Kothari, who has been doing all of the number crunching, joins in with the details.
HDFC Limited reported its Q2 FY19 numbers, and the numbers didn't look too good in terms of the cost of funds that have increased. Now, to explain that, the AUM increase was 2% on a sequential basis. However, the interest income was up almost 6% on a sequential basis, but the interest expenses, that is the cost of funds, increased by 10% on a sequential basis. So this rising cost of funds for the best lender did not go down too well with investors. They also had an expected credit loss of 401 crore. That is compared to about 20 crore in the previous quarter. However, the one-off income with respect to an income of 1,000 crore offsetted this expected credit loss. The net interest margin remains stable, while asset quality improved on a sequential basis as gross NPA ratio declined to 1.13% versus 1.18%.
Okay, all right, Abhishek. Thanks for breaking down those numbers for us. We've got a question on HDFC, actually. Raj Jain from Kolkata. He's written in with a query. He has been holding 600 shares of HDFC at a price of 1,120 rupees for the last 8 months. Now, he's a long-term investor and wants to know what should be done next. Mayuresh, your thoughts on, this price, 1120 is what he's holding it at. And the numbers today, the stock was very volatile around the earnings.
So again, I think the expectations are a little bit on the higher side, so to be very frankly, for the stock. But as Abhishek mentioned, I think it was a mixed bag. So I think if you extrapolate the numbers in terms of asset quality, I think the asset quality pressures have come off, NIMs have remained extremely steady. What has probably happened in terms of the new accounting norms and the new Ind AS, I think that's taken a hit in terms of the expected credit loss, because that number obviously had to move higher. And again, the kind of provisioning that they've done specifically in terms of the ILFS exposure. Overall, I think the numbers were reasonable. And again, I think in the scenario and the conditions that we are probably in, where liquidity probably still remains extremely tight, it can continue to have some impact on growth numbers for the next quarter or so. But I think it should revert back to mean over the next few quarters. It's a qualitative franchise and the investor should continue holding it.
Okay. Mitesh, HDFC at 1760?
See, I think it's had a good run, I think, and now it's showing signs of at least consolidation. So I think long term, I think I don't, disagree that it should be a hold. But in the short to medium term, the stock might underperform after doing extremely well. So I think 1650 to roughly about 1900 would be the range. And I think if the investor wants to take out some money, I think around 1900 would be the level which, if the stock goes in the next 3-4 months, would be a good level to take some profits.
Okay, all right, that's HDFC. Let's move to the other number of the day from the mid-cap arena. Marico was in the spotlight and the stock actually ended lower. Numbers are more or less in line, but nothing very inspiring in the Q2 print that came in. Manglam has the details here.
Marico reported an absolutely in-line set of numbers for the second quarter. Revenue growth at 19.6%, pretty much in line with what the street was working with. Even the EBITDA number was pretty much in line. There was a decline of about 300 basis points on the gross margins, which led to a decline of about 90 basis points on the company's EBITDA, but the net profit too in line with what the CNBC TV18 poll was. A few minutes later, we got the volume growth at 6%, pretty much in line with the band of 6 to 8%. And the company mentioned that ex-CSD, which is the Army Canteen stores, the volume growth would have actually been 7%. So the stock was absolutely flat. However, it will be very interesting to see what the brokerages say as far as Marico's numbers are concerned. As far as the reported numbers, they were pretty much in line.
Okay, all right, Manglam, thanks very much for that. That's on Marico. But the fifth and the last headline for today, United Spirits gained more than 7% after strong second quarter numbers. Liquor company reported a 69% rise in profit from last year. Larsen & Toubro also ended in the green following an all-round beat in the second quarter. And that in fact pulled up the entire capital goods sector in today's trade. We have a couple of queries. We have Sharath Raj from Bangalore, who's written to us with a question on United Spirits. He wants an outlook on the stock for the long term. Mayuresh?
So looking at the numbers, Ekta, again, the premium segment has grown at 14.28%. Now that contributes almost 66% of the overall volumes, and that is growing at a very impressive rate. The other element in terms of the input cost pressures, DNA prices are stable at this point of time. The molasses prices are expected to remain stable. The duty regime looks pretty stable at this point of time. They have taken rate hikes in a few states. The go-to-market strategy in the UP market has changed. And again, I think the non-efficient manufacturing plants have been shut down. So actually, in the quarter gone by, they had gotten down to 50, and the distribution network had improved. So all these factors are effectively playing out in their numbers, both in terms of volumes improving, margins remaining stable, and again, I think the bottom line showing stupendous growth. So if I have to take a view on the stock and specifically United Spirits, I think the investor can look at the stock on declines. I think even if one looks at an EPS or an earnings growth of anywhere between 12-14% and a volume growth on 10-12% on a conservative basis, the stock can reach higher levels from the current.
Okay, all right. We have a question now coming in next. It's another one from Rahul Walia. He has tweeted in with a query on L&T. He wants a long-term outlook on this stock. Okay, he's talking long-term. First, let's just get a quick fundamental take, Mayuresh. A quick one from you. Numbers were fantastic at the end of second quarter. Would it be a buy?
It would, and again, I think it was an all-round beat. So revenues exceeded expectations, their EBITDA margins improved, which gave the trickle-down effect to the bottom line. Order flows have been strong, and though it might get front-loaded because of the elections happening in the fourth quarter, I think the stupendous show in terms of the execution on the ANC and the domestic ANC specifically, the margins there curtailed a tad bit in terms of infrastructure segment.
Time for very quick LNT level.
Largely, I think it's a very impressive stock to be held on for a long time.
Okay, Mitesh, what would you recommend for LNT?
Yeah, I would agree. I think, the stock long-term chart looked pretty interesting over here. It's been doing a range of about 1200 to roughly about 1400, 1450 for the last 9-10 months. And I think eventually there would be a breakout happening on the upside, though it might take still a few more months. But I think, the way the charts are shaping up, after a few more months of consolidation, I do expect 1450 to be crossed. And once that happens, I think 1700 would be a reasonable target.
Okay, all right, gentlemen, thank you very much for joining us today and taking us through all of those viewer questions and queries. We'll catch you again soon. Now, before we wrap out of this edition of Markets Today Talk Back, let's also run you through the all-important data that came in. It is the 1st of November, and several auto companies released their sales for the month of October. The first reading tells us that sales have been fairly muted, with Maruti, Ashok Leyland posting slightly weak numbers. There were some bright spots in the form of Mahindra & Mahindra and Escorts. Utkarsh Chaturvedi is here with a wrap of all of that action. Utkarsh?
So, Surabhi, I'll go segment-wise, and as you said, let's start with Maruti, because it was Maruti which was leading the charts from a very long time, and in the past 2 to 3 months, we have seen that really going down, and we can now surely say, looking at the number, that this festive season, at least in the past 2 to 3 years, have been the worst for auto companies, and Maruti is leading the charts. If you look at the sales number, it is 0.02% up the sales for Maruti, and also very important thing to look at is that Maruti never had any new launch this festive season, and that is the reason why you saw the growth not really coming in. Also, discounting levels on Maruti, a lot of models were high. In fact, it's only the SUVs which gained, because the Vitara, Brezza doing really well, and that is where they saw a growth of 11.2%. Otherwise, in all the other segments, the sales were really flat. Now, let's come to Mahindra. As you said, Mahindra has seen a growth of 14%, but these are wholesale numbers. And remember, last month, Marazzo was launched, so all the restocking of that vehicle happened. So you can also see this as a Marazzo impact whenever a new launch happens. So we'll have to really wait and watch for the next month or the detailed copy of the Mahindra numbers of how have the other vehicles done apart from Marazzo, which has just been launched last month. Speaking of Tata Motors has been doing fairly well despite industry pressures. All of their new launches, whether it be Nexon, Tigor, all of them are doing pretty decent, and they have a growth of around 11% in the PV sales. On the CV sales, the growth continues for automakers, but not the way it was in the first half, and you can see the pressures coming in. So even if it is Ashok Leyland is up around 17%, but it is lowest since May 2018. Same the case with Tata Motors. Tata Motors commercial vehicle sale is up 22%, but this has been around in this area from the past 2 to 3 months. Vis-a-vis when we saw in March, April, they were growing at 30-35%. So clearly you can see some stress in the CV space. PV space, we can clearly say that the festive season has not been good. The numbers for RE have, Eicher have also come in. VECV 14% up, but speaking of Royal Enfield, it's only 1% up, but we will also have to factor in the issues of a strike in their plants, and that is why the dispatches wouldn't have been that great. So we'll have to wait for more on two-wheelers at least to get a clear picture on ground. But for PVs, we can say that this has been a muted festive season, and the next month will be very important to see what kind of numbers will they do.
Okay, all right. All right, Utkarsh, thanks very much for that. And on that note, it's a wrap on this edition of Market Today Talk Back. Thank you very much for watching.
Have a great evening. We'll see you with the markets again tomorrow.